Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor. It is the 30th day of January, 2026. I'm really happy to tell you that Michael Oliver is with me once again. And what a day to have Michael with me.
Oh,
It's really, the precious metals are getting slammed extremely hard. I'm looking at at least these are cash market numbers. I think we're looking at something like 11+% down in gold, 26% down, 27% down in silver. That is in a single day. Volatility, I guess maybe it's not totally surprising. Alistair McLeod pointed out in a piece he wrote this morning. He said, anytime you have a 66% rise in a month, you might expect some violent price activities in both directions. So I can't think of a better time to have Michael on with me, honestly, because Michael over the years has been so helpful to me in times like this, times when everybody else is throwing in the towel. Michael just kind of calmly, quietly sits back and says, "Nope, don't bite on it." So, Michael, thank you so much for joining me today.
good to be here, Jay.
It's good to be here. So, I'm wondering, is this some sort of a blowout top? Or you talk about fake outs? What are your thoughts about this?
Well, I have to
Price
admit
hike?
it's bigger than I would have expected.
Uh-huh.
Okay. But there's too many things wrong with this being a top. Um, we look at silver from all kinds of silver, especially from all kinds of angles, its own technicals, its relationship to other assets like gold,
Mm-hmm.
uh, other things that are going on in asset class shifts.
Mm-hmm.
That are important, that are like wins at the back of the monetary metals and so forth. And no matter what I look at, they tell me, nope, if you're not in silver, and a lot of people aren't in silver, you ought to consider buying, right about now.
Mm-hmm.
Uh, in the prior explosive moves that we've noted before, back in 79 to 80, after several years of upside, silver went berserk in a span of a couple quarters on the upside. I mean, it just quadrupled in price.
Mm-hmm.
But in the middle of that move, roughly speaking, not in price, but in terms of the clock, you had a correction, one that was worse than any correction that had occurred during the process. And it looked like, oh, well, that's the top.
Mm-hmm.
And for a span of about 2 to 3 months after that first sharp drop, you could draw a line sideways through the weekly action or the monthly action and see up and down, but stability. So
Mm-hmm.
congestion after a sharp drop, though.
Yeah.
And then when it resolved itself and said, okay, up out of here again, the next leg up in price was far bigger
Mm-hmm.
than the first leg part of the move. Okay. Same thing happened in 2010. Over a span of about 7 months, we had a signal based upon this silver breaking out versus gold.
Wow.
Silver's underperformed gold for quite a few years, and it's very low in relation to its historical norms.
Right.
Ounce of silver is worth how much ounce of a gold?
Mm-hmm.
And back in, like in that 1980 move when silver peaked at $50 in that old antique range, okay,
Mm-hmm.
the spread was 6.5%. Silver was 6.5% the price of gold.
Gold.
Okay. And that wasn't a spike. It was up there for a while. Okay. And then in the bull market in silver that peaked in 2011, after running up for years, it reached 3.1%.
Mm-hmm.
Okay. Well, we recently got above 2%.
Yeah. Yeah.
It's so even though we're in new price highs above the entire old antique range, which certainly didn't allow silver to price itself according to the decay in the money unit. Okay.
Right.
It breaks through. You would think maybe in this bull market in silver, and I do think this, that metric, what's the price of silver versus gold, would get up at least and challenge
Mm-hmm.
the highs that it saw in the last 50 years
Like
when it was just at
3%.
50.
Yeah.
So it'd be, 3% plus, or maybe
Yeah.
even 6%. Okay.
Yeah.
We only got up above 2. Okay, so we're still cheap. Okay.
Yeah.
But it's in a positive trend, meaning silver broke out versus gold. When you plot that relationship, there's like a 10-year ceiling
Mm-hmm.
that it kept it capped. And you burst through that in November. So we've had 2 months on the other side of that breakout.
Right.
In other words, that breakout's fresh. It's not old. It hasn't run for a year or something like
Right.
that. And yet the base is 10 years wide. Okay.
Uh-huh.
It's not a minor base. And then when you look at, let's say, asset class flows of, let's say, gold versus the S&P. So people saying, hey, I'd rather own gold than the S&P. Well, that breakout of an 11-year wide base where gold plotted in relation to the S&P, how much is an ounce of gold as a percent of the S&P? And you plot that thing. There was an 11-year wide base with a lovely trend line running across all the highs. You broke out last year in November. So you've had two monthly surges. In fact, even this month, gold's up, S&P's down. So the spread's still working despite gold's sell-off today. Uh, that's a fresh breakout. A couple months ago out of an 11-year base. So those metrics, when you look at those spread relationships, meaning money flowing into monetary metals out of the stock market, just began. And in history, I've looked back, I know this, okay? There's no time when all assets go down.
Yeah.
That is a false notion. They always go somewhere else. People put their money somewhere else. And it used to be one of those places was bonds, T-bonds.
Sure.
Okay. 60% stocks, 40% bonds, the old orthodoxy. Well, even the head of, I think, Morgan Stanley's chief investment officer several months ago said, he'd rewrite those rules. It should be 60, 20, 20, 20% gold.
Yeah.
Even though it was less percent than he should have given it, but still, at least it was an admission that the old reality isn't working anymore.
Right.
Meaning T-bonds are not the alternative.
Yeah.
In fact, they're a time bomb in terms of risk. So, I mean, what does that leave you with? The stock market's gone nowhere for 6 months.
Yeah.
We think it's in a topping process. Real pain won't be evident till, let's say, later this year, I think. T-bonds are anemic as hell, even with the Fed buying them since November. They said, we're buying bonds. Well, you look at a price chart of T-bond futures, it can go down. Yeah, it looks like they've been supported because they haven't collapsed.
Yeah.
But it looks like who's ever buying them really can't get them to go up. Okay.
Right.
So you're left with what? I mean, you're going to put your money somewhere. Where? Okay. And you're left with gold. Now, and then the other argument that something's wrong here about thinking about gold and silver being at the top. Because when you shift over to the commodity complex, cheap real assets in the ground, growing above the ground, whatever, okay. They're as cheap as they've ever been in relation to the S&P. But their long-term metrics say the Bloomberg is just now breaking out of a 15-year parallel channel of price, and its annual momentum broke out in October, coming up through 106.50. Right now it's trading about 119, 120. So commodity assets are just turning up. How does that make sense? If gold's topping, why would commodities be turning up? Okay. Too many things argue here that, hey, yeah, it's a sharp break.
Yeah.
Most, but so was the initial rise. So, give it its chance.
Does that, Michael, does that breakout with today's price action, silver and gold, that is silver to gold, is it still positive for silver?
Oh, yeah.
Still
It's
quite
still
a bit. I
positive.
didn't look,
Yeah,
I didn't do the
even
math, but I looked at,
no,
I think,
it's still
but I think
positive above those breakout levels. But the point is that
you're below 2% though right now, I think.
yeah, that's fine. But the breakout level was 1.31. Our breakout.
Oh, okay. Okay. I didn't
So we're
remember
well
what it
above
was.
the breakout
Yeah.
level.
And the bond market today, the treasury markets, has it
Doing
rallied
nothing.
at
It's
all?
115. It's anemic.
It's
And we've got some numbers on T-bonds, and I think this is dynamite because that market cannot slip. If it does,
if it
it's a
does, game
nuclear
over.
event. And it is anemic, despite the Fed saying in mid-November going to be buying it.
Right.
It hasn't helped it. Every time it tries to rally it, about 3 points below where you are now, in fact, a little less than that, we start to trigger some momentum, long-term momentum numbers on T-bonds that go back 3 years, an uptrend on structure of momentum, not price, that says, uh-oh, you're breaking down again. Meaning yields are going to break out upside, price is going to collapse down. You trigger that stuff, and you've got a nightmare that nobody's talking about in terms of some immediate problem, and that is the high yield end of the market. Long-term rates are choking. They've not relieved anybody. No relief there. You shut short-term rates, but long rates just stay at high levels, choking,
Sure.
choking. And if they spike again upside, price downside,
Right.
Whoa. Then there's doubt among investment public.
Right.
But look what's going on in Japan, okay?
Uh-huh.
About, hey, I don't know if I want to own government assets. And when that comes into doubt, everything's in doubt.
Right. Well, then
Where do you?
yeah,
Yeah,
you have to think the equity markets at some point then
yeah.
have got to
Well,
start tanking, and then where are people going to go? And I have to think
well,
we might talk about the earnings. I think you had talked, I just heard an interview you did with Adam Tiger. You were talking about the earnings. You think this fourth quarter of 2025 are going to be stellar. And if we start running into some, I think they're going to be. I mean, with gold price where it is, silver price where it is, I
mhm.
mean, where it is even today. I think you pointed out that the Q4, the average price of silver was something like $40, which
Well,
is
and
a big
those are,
number.
let's say, upper 40s or 50, but still,
Yeah,
we're 50% higher than that now on a sell-off. Okay.
yeah,
But you got four of the big miners, silver miners, in the first 2 weeks of February have reports.
yeah,
Okay. Let's say you're an average guy, portfolio manager or a family planner. Okay.
yeah,
You've got an office and people come to you and they've been asking you, you're orthodox, you're not a gold guy. Okay.
yeah.
And you like to stay the old 60-40 rule. uh, and you get customers over the last few months call and say, should I buy gold miners? And you've been doing the orthodox, no, no, it's just speculative, blah, blah, blah. And all of a sudden you get these earnings reports coming out based on prices that are still well below here, but still high for silver for the last 50
Yeah.
years, around $50 last quarter. And all of a sudden the earnings are just stellar on these miners. They got to be, stellar. And then when you factor in, oh gosh, it's even 50% higher than it was then all of a sudden you sort of have to admit to your clients, yeah, it might be a good idea to buy some of them. And
Yeah.
all of a sudden, you get a whole new wave of people who haven't invested in gold or silver, or the miners especially, who suddenly have authority to do so.
Right.
uh, uh,
Yeah.
anyway,
Well, well, I'm looking today, Michael, because the equity markets they're pretty weak. Dow's down over a point, NASDAQ down 1.2, S&P down a little less than 1%. You think this could be the start? This could be the start of
no,
you just
we've had
don't.
a bias for the last 3 months since November that the S&P needs to rally. And we're bearish on it. Okay, we think it's a major topping process. But if you look at a price chart of the S&P over the prior handful of months, it's 69 and a half, 69 and a half, 69.50 area price level. Never could get to 7,000. And we argued need to get up over that 7,000 by a certain amount in order to do something to our monthly momentum. Let me
Mhm.
explain what that is. That's an intermediate metric. In other words, it inhales and exhales about every 4 or 5 months. Okay. And it needed to go up. The momentum did to cool itself off. It had been coming down for too many months. And we've been getting that. We've been getting some upside, but very timid. And we got up over 7,000 just recently, but not enough to do what we wanted to do.
Mhm.
I have this gut feeling, it's just a gut feeling,
Mhm.
that the Supreme Court's been sitting on this tariff issue
Yeah.
since November, I think. And everybody's wondering when the heck are they going to give a decision? And
Yeah.
everybody's thinking, well, it'll be at their normal time in February the 20th or something.
Yeah.
But I strongly suspect they're gonna kick Trump in the shin and say no in some regard, no, or to
To a
break it
certain
up or
extent.
halt
Yeah.
it. Okay.
Yeah.
And we know investors. I like the market to top with a smile. That's what I'm
Uh,
saying. And what would be neat is for them to kick him in the gut about the tariff issue and therefore create enthusiasm among stock market investors thinking, oh boy, the only problem we faced was that damn tariff issue since early last year when he
yeah.
brought it. And now it's no longer an issue. We can go long again
Uh-huh.
and get that little burst of happiness.
Yeah.
And then after you get that happiness and have erased that headline story,
Mm-hmm.
which only just popped up early last year, tariffs.
Mm-hmm.
It wasn't an issue 3 years ago, 4 years ago. Uh, get it out of the way and don't let that be a dark cloud and then go down with a smile because that's the way you want to top.
Mm-hmm.
When everybody's smiling and they can't figure out why it's going down. uh, I think it's going to go down, but and I don't think the S&P has crash dimensions to it.
Oh,
At least not until you get down fairly far below where you are now. In other words, we could go down in the S&P even 20%. Like January to April was like a 20% drop, but
right.
during that time, gold
Yeah.
was quite steady. Okay. So, in other words, not a crash event, but an arm wrestling decline. And it's not until you get the S&P down to around 5,400
Hmm.
at some point this year. Well, that's down there, that's 20% below you or
Yeah,
something.
sure.
So you could arm wrestle your way down there in a zigzag, lazy manner.
Right.
And it's not until you get there that you really are at risk of a crash, which is what everybody in the precious metals area is always thinking. If that happens, we're going to go down too.
Yeah.
Uh, that's not on the horizon.
Yeah.
So again, I'm looking at silver and gold and I'm saying, yeah, it's a huge break. It's an up month, but and it's still beating the S&P because it's having a down month. They're having up months. So their spread is still, nothing fits with this being the top in the monetary metals.
Hmm.
Nothing fits that I can see.
Yeah. So it's maybe it's a pause.
I think it's the creation back in that 79 to 80 surge, there was a
Mhm.
pause. And in 2010 to 11, there was actually a monthly key reversal month. It was in January of 2011, and you collapsed a big bad month.
Mhm.
It wasn't an up month that sold off its high. It actually closed down on the month.
Mhm.
So what price chartists would say, that's a key reversal. Okay.
Mhm.
And it turned around the next month with no follow through and blew out the high. Okay. And exploded even more after that nasty reversal than the gains that it had seen up to that point.
Right.
So it was a midpoint hit that made everybody think, oh, that was it. And it wasn't.
Mhm.
And I think we're at that point
Okay,
where
but it's just that it's coming a little earlier on the clock
it's,
than
yeah, a
you expect.
little earlier. This is 2 full months into the move. That one was 3 months.
Yeah.
Okay. So
Well,
yeah.
I think that you've talked about prices for silver in the 300 to 500 range, which most people think is ridiculous. But as Alistair says, most analysts think that this is it. They see this sort of
That's
a
fine. Yeah. Yeah.
and it's all over.
Hmm.
So it matters why. Why did it go up in the first place? And of course, there's no understanding of gold and silver as money to start with. So if you look at it in terms of that, if you really measure everything in terms of ounces of gold rather than in dollars,
Hmm.
I think you'd
Hmm.
have a better picture of what the world is really like. And of course, most people we're not trained to think that way, and people aren't thinking that way. So yeah, I mean, if you think the dollar is the holy grail and that's the currency you got to live by, then and it's if you really buy the idea that it's solid, I don't know how you could do that, but some do, I guess, and that's all you have to go by. So yeah, it's understandable why people can't see what you and I see, what Alistair sees, and other
Yeah.
people understand what money really is. Um, could you see silver dropping or testing 50?
No, I don't. It doesn't make sense to me. No.
Yeah,
Uh, the I'd be looking right now. Our daily stuff is overdone. Okay, we know that daily movement, short term,
yeah,
and even the weekly says, "Hey, yeah, look for a low real soon." So if somebody had not invested in silver or gold up to this point,
yeah.
for whatever reason, uh, and is thinking about it. Of course, now they think, well, see, I'm glad I didn't. Well, of course, where would you have bought it? If you bought silver in the 30s and 40s, okay, are you doing bad? Okay, well, yeah, if you bought it at 110, maybe you're hurting. But you got to regard this pullback as an opportunity because I see nothing that argues that we're at the top. Now, let me give you an example. The MSA is very flexible on long-term assessment. Yes, I understand the fundamentals of gold and silver.
Yeah.
Philosophically, I've long understood that.
Yep.
And ultimately, they win. They
Hmm.
always hold value, especially gold, versus the decay in the money unit.
Sure.
In other words, you look at an M2 chart and it's parabolic. That reflects the decay in the money unit because of the quantities exploding. And gold reflects that by continuing to hold value versus that thing. Whereas even the stock market doesn't hold its value versus the decay in the dollar. In
Hmm.
fact, if you go back to 2000 2000, the
Yeah,
dot-com pop, 1500 S&P, and measure where it is now. Factor in the decay in the money, it has not kept up with it.
exactly. I believe gold
Yeah,
has outperformed the S&P since.
gold has vastly outperformed during that
Yeah.
25 years. So,
You-
yeah, there's ups and downs, but it continues to hold. Okay. People forget that. They don't notice that.
Yeah,
Silver has vastly been capped off, something we pointed out, in
yeah,
a 50-year range. And you say, well, okay. Well, copper, we did studies of this, copper and lead, two base metals.
yep.
You go back to this 1970s, 80s, 90s, 2000 till 2005, copper was in a rectangular range, just like silver.
Mm-hmm.
$50 range to $4. It was 50 cents to $1.50 a pound. Finally, in late 2005, copper punched up above the top of that range,
Mm-hmm.
credibly, and began an explosion. It quadrupled in price on its own.
Yeah.
Wasn't with gold and silver, wasn't with other base metals. Quadrupled in price in a matter of several quarters,
Mm-hmm.
and then lived in a new reality between $2.50 to $4.50 as opposed to 50 cents to $1.50. But it did it so suddenly. Then you look at lead. It lived in a range similar to copper's, but it didn't break out till 2007, and it quadrupled in a matter of several quarters
Oh,
and lived in a new. How come silver hasn't done that?
yeah.
If silver were to match that, you'd be $300 or $400. And if silver were to go up to price levels that reflect the decay in the money unit versus where it was in 1980 or even 2011, it'd be several hundred to $500.
Yeah. That's where you
And
come up with
yeah,
that number.
in terms of compensating for this underprice in relation to
Right.
the money unit, okay?
Right.
And catch up to gold in
Mm-hmm.
value. So no, I don't think this is a top. This is a buying opportunity, especially if you've not been in. And
Mm-hmm.
look for the turn.
Yeah, but as you
That's what
say,
we'll be focused on.
most people won't recognize that buying opportunity because they've been trained to think of, in terms of dollars.
Yeah.
Um, I talked to Frank Holmes yesterday, and his view on silver's strength was that it's coming primarily because of this massive industrial use and military use application, high-tech applications and so forth.
Hmm. Hmm.
And Frank doesn't see it so much as a monetary thing, but I don't know what your thoughts are.
I do. It's
You're
still
a
money.
you're a technical
Yeah.
analyst, and so
Yeah.
you let the numbers talk to you, and then on that basis, maybe try to figure out why. But it's not important. Primarily, you just want
Yeah.
numbers to tell you what it is, not philosophically why it is where it is. But
Yeah, but it's numbers when you compare it to its metal that it's been linked with for centuries, for thousands of years, is gold. I'm
yeah,
sorry, silver is money. In
yeah,
fact, it's been legal money, and like India's even thinking about it. Okay,
yeah.
so you
And
get into
China used silver as their monetary
yeah, and
way in
gold
the
as
past.
well. Yeah. We get into a crisis in the West. Now we're in one in Japan.
Yeah.
They've got a situation where a government bond market of a major US linked power, call it a Western power, even though it's in the East, it's part of the West, uh, is in collapse mode. You can't have that. You
Yeah.
could have mortgages collapse like 7 to 9. Okay, they'll print money to cover that. But when their own government debt instrument is in jeopardy, as ours is,
Yeah.
ours is already collapsed from 2020 to 2022 from a price of 190 on T-bonds to
Hmm.
117. Where is it now, 3 years later? 115. It can't get off the floor.
Yeah.
It can't. It's tried multiple 3 waves of rally, not been able to get off. If you slip about 3 points below where you are now, you're going to have another plunge. You can't have that because when government debt is suddenly highly questionable.
Hmm.
Wow.
Yeah, and as you pointed out, the Fed has been buying the long end of the curve to
Yeah.
an extent. So it's
Printing money to
it's
buy them. Yeah.
masking, it's really
Mhm.
masking the weakness that's really there
Yeah.
at this point in time. Yeah, so I guess maybe that would be sort of a death knell of sorts if we really started seeing the T-bond markets crash. And I mean, there's no end to spending that Donald Trump wants to undertake. So
Yeah. Yeah.
I mean, the
Yeah.
one good thing I see is that he does, if to the extent he's able to, increase the supply side and production here at home and create jobs and so forth. But I don't know. I mean, going into
Yeah,
debt
we'll
for
see.
growth.
We'll see about that. Not if the economy turns down with the stock market, which it always does, by the
Yeah,
way.
yeah,
And we argue the S&P is in a topping process, has
yeah.
been since early last year when it was at 6,200 high, basically in February. Now we're at 6,900, so yeah, we're higher. But don't be shocked if at some point this year, the guy who's looking back at his retirement account, look at where it was in 2024 versus 2025. He's smiling because he had a 15% gain.
Yeah,
If he reflected the S&P, that is.
yeah,
Uh, if you take that 15% gain away from him
yeah.
sometime in 2026, no crash, just take that away. All of a sudden, he's back to where he was in 2024, and
Yeah.
his retirement account drops, oh God, all of a sudden his view of his future isn't too good.
Yeah, at the same time, prices are rising, maybe
Yeah.
accelerating.
If the commodity boom and crude
Yeah.
oil is breaking out big
Mm.
time this month, I'm making a bet, and not a bet, it's an analysis that crude we've been watching for months. We've defined a breakout level. It is crossed it this month.
Hmm.
It's not a level that's evident on the price charts, but to us, it is evident on momentum.
You seeing it on the
63
minute?
bucks. We're going to close the day well above it, the month. I wouldn't be shocked that crude rushes into the $90 zone very quickly, like within several months.
Yeah,
Now, that's not even high because we were at 130 back in 2022.
correct.
So that's not even halfway back to that high, but that's a 50% increase in gasoline prices.
So, so you're expecting, you think this downturn could last long?
In what,
In the
monetary metals?
metals, in the metals, yeah,
No, I don't think so.
yeah,
No,
yeah.
I think it could be very quick, numbing. And fortunately, the people who got in at the appropriate times,
Uh-huh.
uh, for instance, we pounded the table back in June of
Yeah.
last year.
Hmm.
Silver was coming up into the 32, 33, 34 zone again. It had already been to 35 a couple times plus. When it was in the upper 34s, we said, this is it. You're going to accelerate even before it broke out over the 35 highs that had occurred over the prior year. And what did it do? Boom. Okay, so our buy levels were, our last major buy was there. Then we went through the idiot level. I call it idiot because any idiot can see a chart go back to 1975, a high at 50 and a high at
Yeah,
50. You
right.
finally broke out above that.
Yeah,
And right now you're 50% above that last trade of the day today, but
yeah.
even more than that in the 76, 78 level, I think on the closed settlement today. Uh, yeah, it's a sharp pullback, but meanwhile, look what happened
Hmm.
since June.
Yeah,
Look what
exactly.
happened, since we broke out over 50 even,
Yeah,
you're 50% gain in what, a month
yeah,
or so?
it's crazy.
Okay, yeah.
Yeah,
Uh, anyway, yes, and I think it is a mistake to regard silver as just industrial. I think
yeah,
silver is a surfer, and he's surfing on two waves. The one everybody knows, that's the supply-demand deficit. That's
right.
now a well-known fact.
Yeah,
And
oh,
it's
yeah,
persistent, and it's not getting better, okay? And it's
yeah.
not going away. The world needs solar panels, especially the undeveloped world, lesser developed world, because they don't have power plants in every city. And China is satisfying that demand by producing like 80% of the world's solar panels.
Solar panels, yeah,
And they need the voltaic cells have silver in them. And then the AI expansion we're all hearing about and the
yeah,
computer, that silver is essential in that.
yeah.
Uh,
So it's both an
Pervasive.
industrial and a monetary metal,
Yeah.
and that's
And yeah, nobody's
and
talking
yet,
about the monetary
well,
aspect.
it's been kept at bay. I mean, we haven't had. Andy Schechtman argues that we haven't had price discovery in gold or silver, especially silver, from as you pointed out, essentially. What doesn't
Well,
make any
copper
sense.
did. Copper did in 2006,
Hmm.
fourfold. Lead did in 2007. Gold, look at it. 1980 high, 2011 high, vastly above it. And by the way, the two surges there, I've said this probably before on your show, 76 to 80, that bull market, eightfold move.
Hmm.
2001 to 2011, eightfold move from bear low to bull high. Where was our bear low? 1,050. What's eightfold? 8,500.
Yeah,
Did we get there? No. We haven't even matched the multiple gains that gold has seen twice before in routine bull markets.
yeah.
And yet it's overdone? Oh, I think
And
not. Okay.
and I know you don't think this is anything like routine, but I have to ask you, Michael, what's your hunch on silver? Silver has been such an anomaly, as you point out. These other metals have had runs, but silver has been
Yeah,
kept at
it
bay.
got it achieved nice enough levels for me to smile to say, oh, that was a midpoint high in time clock, not on
Uh-huh.
price. Well, you went from, we got bullish at 35, it broke out at 50, and next thing you know, you're 120. Okay, so there's a high. Okay, let's assume that's your midpoint high,
Yeah,
not in price, but in the on the clock or so.
yeah,
So maybe you got 3 or 4 months on the other side once you break out above it. Uh, in both the 79 and the 2011 surges, what came on the other side was vastly more than what was on the first side of the
yeah,
swing. Uh, I still think you're going to several $100s on silver. It
right,
wouldn't even shock me if you went to 500. Now that sounds ludicrous. Here's the logic behind that.
right.
Silver range in arithmetic price was $4 to 50 for the last 50 years.
Uh-huh,
That's a tenfold move. Okay.
right.
But if you do an arithmetic chart and you're an orthodox price guy, you
Mm-hmm,
draw a rectangle and you take the rectangle distance and you add it to 50.
mm-hmm,
Okay. If you take $4 to 50, you end up with something like mid 90s would be the swing objective,
uh-huh,
$45 swing. Well, look what happened several weeks ago. We stalled for a couple weeks in that 93 to 95 zone, where those guys were no doubt taking profits,
uh-huh,
thinking, oh, we reached the swing objective. Okay.
mm-hmm,
You exploded through that and proved no, wasn't the swing objective. Okay, you went to 121, nothing to do. If you take the logarithmic scale, ratio price scale of silver, and you go from $4 to 50, let's call it 5 to 50.
yeah,
That's a tenfold dimension move from bear low to bull high.
right.
Tenfold above 50 is what? When you take a logarithmic scale and take the
Yeah,
thickness of the range, and it says 500.
500, yeah.
If you go back to 1980 high in silver and factor in the dollar's decay, you'll come up with something like that too.
Mm-hmm. No,
So it wouldn't shock me. And also, when markets get overly done one way or the other, silver overdone on the downside,
overdoes, yeah.
it
Either way,
overshoots. Maybe it goes to a new reality, but it goes in excess and
right.
then pulls back to
Yeah,
the new reality. So
yeah.
don't be shocked about what comes on the next, let's say by summer.
And a similar logic, I think, has gotten you to 800, 850 or so. I mean, 8,000 or so in gold, right?
Well, that's not even a target for us. That's simply saying
That's
that's
just
what it
getting
did
back to where
twice
we were
before.
before.
Yeah. I mean, we've done it twice before under conditions that were hardly as fundamentally earthquake
Yeah,
as
as
what
it is now.
is driving gold now.
Yeah, yeah,
So I don't even expect it to stop there, but we haven't even gotten to the ratio moves of those bull markets.
yeah. And then if you get to 3% or higher in silver, you can see silver going to
Oh, well,
extremely high numbers. So,
yeah, even gold at 8,500, do a 3% of that, you're talking, 200 to 300 silver,
yeah, right.
And if it went to 6% like it was in 2000, back in 1980, when it was 6.5% the price of gold,
Yeah,
wow. So,
yeah. I
no, I don't think we've got a top, and I think this is just the jiggle in the middle. And
jiggle in the middle. Okay,
mhm,
jiggle in the middle. That's a good
mhm.
title for the.
Okay.
But yeah, you're very fond of looking at spreads, and I know you like to look at the spreads, like the shares of gold to gold to the bullion,
Mhm,
silver shares to the silver
mhm.
bullion. What's that looking like now? I mean, they're still very
Yeah,
suppressed. Shares are, right? So
yeah.
an awful lot of upside, even if we don't get the kind of breakout you're talking about. If silver and gold stays where it is now, I don't think the market is recognizing, hasn't
No,
priced in
no,
yet.
no, no,
No.
no. They haven't. The miners are vastly undervalued. We measure XAU index because it goes back to the 1980s, and we can go back far in measuring its relationship to gold. It's gold and silver miners
Hmm.
versus gold. And we're now back below 8%, meaning divide XAU into gold. We were up around above about 8.6% earlier this month.
Hmm.
There is a range on the spread relationship between XAU and gold
Hmm.
each month, plotted what percent is XAU to gold between 5 and 8+% for 11 years. We
Yeah.
probed up over the 8% a couple times, did this month as well.
Uh-huh.
If you get a month that closes over the top of that range, like above 8.6%, okay, we're
Uh-huh.
not there right now. We've tried. I think we'll get there. There is nothing on that chart. You go back to the 1980s and you'll see that XAU on average for decades was 25% the price of
Wow.
gold on
Wow.
average, so it above and below there,
Yeah.
with lows on that spread relationship over decades at 17 to 18%.
Yeah.
You collapsed to 4% by 2015 in that bear market. The spread collapsed, meaning the miners devalued the gold. And they've lived with highs about 8%. If you broke out of that spread relationship and shot up even just to the bottom
Hmm.
of that prior multi-decade relationship,
Strange. Yeah.
you'd more than double the value of gold miners and silver miners
Right.
to gold, just
Yeah.
getting there.
Yeah.
Wow. I
Yeah.
expect it to happen.
Yeah, there's so much, and I think in part because there's a lot of people got rich really fast in the high tech sector, and it's just, I mean, there's this little company called Hydrograph Clean Power that I follow, and
Mhm, mhm.
Michael, I made more money in 3 or 4 months than I did in 30 years in the mining sector.
Yeah,
I think that's
yeah,
because I took a very aggressive
yeah.
position in all of that. But not what I'm
You've been
saying
on
is,
top of that one. You called that and we're on top of it.
well,
Congratulations. Yeah. Yeah.
yeah, but the thing is that it's exciting to see things move fast, and tech stocks have moved really fast. And the business model for miners, it's a tough business, Michael. It's a tough business. It's capital intensive.
Hmm.
It's
Hmm.
dirty. I mean, the mining itself is not, it's not
Hmm.
easy. It's not sitting in a posh office somewhere,
Yeah.
with your keyboard. It's and looking at sexy chicks. It's out digging dirt and stuff. It's not.
Hmm.
So but I think in general we've gotten lazy and we've offshored those sort of wealth creating industries like mining, like
Hmm. Hmm.
manufacturing and stuff. And I think Trump is trying to bring that back. I don't know if he can't do it, but maybe forces are in play. And I heard you talk to Adam yesterday in your interview with Adam Taggart, and you suggested, as you have on this program in the past, that we may see a return to Mother Nature may force the markets to go back to honest money at some point in time. You
Yeah.
you really
It's
believe?
already begun. It's already begun. I mean, in
Yeah,
China, India, and I think once you get into more of a crisis like the stock market decline and therefore more Fed printing, they always print during that.
yeah,
And also they've got to defend the bonds, and that takes a lot of money to be printed to defend
uh-huh,
that.
uh-huh.
And they got no choice but to defend that.
Well,
There's
Judy
no
Shelton,
decision-making process there. They have to defend that.
right. Well,
Uh,
Judy Shelton is talking about, and I think it's probably something the administration is considering, is a gold-backed long bond to start with, something
yeah.
along those lines.
Well, whatever,
And I
but
know
it's
Frank Holmes yesterday thinks that stable coins, gold stable coins in the digital world might be something that's some sort of a
mhm,
digitally
mhm.
backed, a gold backed digital currency of some kind might be in the making as well. Well, I guess maybe we just sort of sum up here, Michael, if I hear what you're saying is this is more of a fake out than a correction or nothing really serious, although it looks serious to a lot of people. You're
Mhm.
extremely bullish. I heard you say on oil, and I heard other people like Miss Palmboy that Adam has on, and Rick Rule and others that are really turning bullish on oil right now.
Mhm.
Copper, I guess those are things you think are going to do
The
extreme.
commodity complex in general
Yeah.
is a heavily discounted asset category relative to anything else.
Hmm.
You should see the spread of the Bloomberg Commodity Index versus the S&P. If you
Right.
saw that chart where it was in 2008, when
Yeah.
Bloomberg was high and
Uh-huh.
stocks were low, it's collapsed down to effectively zero. Okay.
Really.
I
Oh,
mean, when you see a spread collapse from certain levels to another level that's so cheap, it's next, 2%
yeah.
Bloomberg price of the S. No, seriously.
Yeah.
Uh, it, what are you going to do? Is it going to go to zero? We don't need
Probably.
commodities anymore in the real world.
Yeah.
Okay, we can live off AI. Okay.
Well, maybe
Uh,
a lot of people aren't living in the real world anymore, Michael,
well,
in their
it's
mind, in their brains. I mean, we don't know for sure what a woman is or what a man is.
yeah.
I don't know.
Anyway, well, there's an appreciation of commodities, and it's coming, and it's going to be volcanic. And the Fed's going to have to deal with that because they can't deal with that. They can't stop. They can't stop printing because they got to. You roll that stock market over, you don't get that bond market off the lows. They have to print, print, print. I don't care what
Yeah,
the
but if
other
they print,
mandate says.
but if they print, 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 and there's nothing behind it, there's nothing real. People won't buy it. I mean,
Yeah,
it's
no,
when confidence. It's
it
all about
doesn't help.
confidence.
No, it
It's
never helps the stock market when they print and they cut
it,
rates. It never helps the bear
no.
markets occur. Money flows elsewhere.
Yeah.
Gold.
All right. Yeah, we got to go to gold. I
Gotta
think
go.
that's
Thanks,
it.
Jay.
All right, Michael. Thank you so much for your time. Always a pleasure having you. Folks,
Thanks.
keep your eyes on our Substack box, your emails on our Substack messages, because we'll have some more. Andy Scheckman, I think, is going to be a guest next week, and there will always be CEO of some exciting gold and silver companies. So until we meet again, goodbye and God's blessings to you.